good day, all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up, and this wrap-up is for the evening, as we're here now on Wednesday, the 4th of September, 2024. You know, let me give you a warning. I wrote tonight about, do you remember when mobile phones first came out? We're talking in the 90s. I don't want you to think I'm going back with Alexander Graham Bell. And boy, you got to have the first Apple phone and something like that. Can you live without it today? Because all the other phones mimic it in one way or the other. Well, AI is right at its fledgling part. And as it's at its fledgling part, all these companies are investing. And just like when they did when Apple came out and these companies were trying to make phones that can compete with it, it was a money pit until some did really well. Well, AI is going to work that way. This is not a flash in the pan. It has been around. When you type in, like I do when I text message, don't you get automatic spell correction and things like that? I do. What else do we get? When I'm trying to write something, I'll sometimes all of a sudden the words come in to finish it for me on my computer. Do you get that? Part of this is AI. That's the beginning step. I am not of the opinion that AI is going to replace people. AI, in my opinion, will make us better workers. We'll get a lot more done in either the same or less time. Do I think we'll be replaced? No, we'll be retrained. That's what I think. You keep hearing about this. How many cars are built with robots today? Yet there's still plenty of auto workers. And those that aren't auto workers can find jobs out of the auto plant, and they can work in the supplier's plant because they understand different things. What I'm getting at is AI is in its infancy. And yes, NVIDIA at 140 was rich. Okay, what's not rich? Now you've taken the market down roughly $36 from its peak. I'm not interested in picking a bottom. I'm interested in picking more up when the chart tells me to do so. It's not telling you to do so right now. Patience, okay? But do you think AI is going away? Do you think the big companies are going to say, we're not getting a return and we're not going to buy these newest chips? Nope. What else do you know? Use common sense. How often do you have to replace your home computer? Every 5 years if you want to be modern? At the beginning, who knows? Now we have chips that are a little better and hard drives and static drives. They're no longer mechanical and you can get more performance. But as you know, you then get a letter from Microsoft or Apple or whoever, and they write, we are no longer supporting the software to run this version. Built-in obsolescence. And even NVIDIA will have built-in obsolescence. Now, do I know if the government's going after them or not? I don't know. I know that today a formal announcement came out that they have not received anything from the Justice Department, but if they do, they're ready for it. They know how big they are. They know what comes with getting big. When you get big, just like everywhere in the world, governments look at you. Are you too big for your own good? Are you destroying the industry around you? They'll deal with it. We then take a look at other markets. GM. I bring this up because Volvo today made a statement. Now, I think of Volvo as that green car. They don't want to use real leathers. They're going to use different ways of doing it. And they were going all electric within 6 years. Well, magically, they've come to the realization that no, they're not. They're going to stick with hybrids, GM and Ford, hybrids, that's where the money is, and electric cars, and then let the markets and different world markets evolve to where they're at. The right thing to do. Smart move. Why? Because most countries aren't like China, where they're going to put charging stations everywhere. Why? They don't have to make money. The government says they're going to be everywhere. They're everywhere. And if the government doesn't like that, well, it just says like any other business that the government there goes into. They overproduce, they kill the market. Real estate, the hog industry, I can go on and on. Steel, going on right now. But the markets will evolve. It's not going away. And slowly, in most markets, electric cars will continue to evolve and they'll get up to larger and larger market share. But I'm going to repeat, try to drive cross-country in America in an EV, and most people are concerned. Where's my next charging station? Do I have to wait 30 minutes to do it or 2 hours because it's not the fast one? What's going on here? Blah, blah. Okay. Where we know we're getting bids are the BND market. You were down in Amazon today. Netflix is a wild ride. It's been all over the board. Schwab down. I was watching Hood today, what Robinhood was doing. And a lot of markets pulling back. And why not? We know the consumer's pulling back on you. What else? Well, before I get into BND, let me remind you of a couple of things. Number one, my sale on my Spider ETF video, 3 months, instead of $48, $32. You get a video every morning, Monday through Friday, as long as there's not a holiday. And then a weekend video, typically, where I cover the weekly charts. But each video covers every trade recommendation that I'm making. I'll have a spreadsheet there that we look at with specific instructions what to do on that trade. That is mailed to you typically before I even record, so you've got it in your hand, and then when you see the video, you know what I'm looking at. I think that works pretty neat. I highly recommend you take that with at least a 3-month combo package of futures, because when we get into this, as you know, be it the SPY, DIA, TLT, GLD, they're all based on futures. So you want to see how the two play with each other. OIL, it goes on, USO, they all go in different ways that way. So how you get this? Move your cursor to the top is the way to do it. You'll see an icon, give it a click. If you're on my mailing list, I sent you a mail for it already. This ends in just now 3 more days. So take advantage, please. We've never done a 3-month special. We think it's doing well. So I'll do BND, then I'll show you the day's news for tomorrow. In BND, you're back up and challenging these highs. Why not? If you look today at the 2-10-year, you saw that they went to 0. Now, they came back and forth a little bit. It even went, for a moment, it wasn't inverted. But you're right at the cusp of that where it's going to go in, and traders get scared because traditionally and historically, once you've been inverted and you lose it, it means that the economy's getting really bad. A recession is likely. Things are going down. And that goes back to the old way. If you want to borrow money and it's longer term, you're going to pay a higher interest rate than on the shorter term. We're getting back to normal. That's not a bad thing. When you take a look here, are you trending? You are not. You have a lower low, that spike low, and a higher high on the swing line study. What else? You're back into the resistance of these numbers, and the Bollinger Band's right there as well. So even though tomorrow we're going to get ADP numbers, and today we had a JOLTS number that showed 450,000 less jobs being offered, that's kicking the market up. But where to is the question. What else on the chart? Do you notice you're staying over the 18-day average? My rule is, and I give it to you all the time, when the market's over that, you have a bias to be long. You're not a short seller. You're looking for corrections in the market if you can establish a long position from them. Are we overbought? Absolutely. You can see these numbers. Any reading in the slow stochastic over 70 is overbought. In order to embed, both have to be going sideways over 80, like they did here and they did back over here. You're not at that point. Now, as I said, we should look at the news of the day tomorrow, and we'll do that now. At 7:15, we're going to get the ADP numbers. They're looking for 140,000 jobs versus 122. On the claims for the weekend at August 31st, market expects 225. Last week was 231, so a little less number is the expectation. I don't pay a lot of attention to revised numbers unless they come out big, but they're looking for productivity revisions, and they're looking for, when they say the word final services PMI, it's a revision number. So they're looking for it to come down a tenth. Who cares? ISM PMI, They're looking for a 51 versus a 51.4. Still okay. It's close if it comes in like that. And we'll get petroleum stocks. I think we'll get natural gas, but I don't know. The Labor Day holiday throws off some of the reporting that we get in those markets. All right. So let's us go back now to the chart. And here we go. I thought we were there. I went too fast. And there we are. All right. When we come to Rivian, I have been telling you here that I think the market's got a shot. It going down to the 1260, 1257. The two numbers I've been looking at specifically, and they change daily, are the Bollinger Band and the 100-day average. And right now, if the market takes a hit off the jobs report or whatever, that probably is enough to get the market down there. And I think long-term traders might be stepping in there. Certainly the short covering is what I expect to take place there. On CrowdStrike, as I told you, the market, I think now, has found a home. I doubt you're going back down here. That was a one-off event. They have to get through a few quarters where they're going to eat money. What do I mean by that? They did damage to people. And in order to keep their clients, they're going to do the old thing. Hey, let me make you good with free services for X amount, or I'm going to reduce what you pay over the next period of time. That'll hurt their earnings a little bit. Okay, but their business is back to sound. And if I think they'll make that mistake again, absolutely not. I think the CEO would be gone and the whole management team. It isn't going to happen. There'll be so many checks and balances in place that it'd have to be something big in a snafu or sabotage. In uranium, as I said yesterday, you're down to the Bollinger Band, expect short covering there, but the market just doesn't have staying power to the upside. You know, we're just not hearing that there's the wherewithal, and I think there should be, to build more nuclear plants, especially in America, in isolated areas to get onto the grid and produce more clean energy. All right, we can do it. We can do it safely, away from fault areas, all that. It can be done, especially near areas limited in size, by the way, not big ones, limited in size. What about all this AI that draws so much energy? To me, it's a natural way to get that going. I don't know why some of those companies don't get together and talk to the government about it. Dell, as I told you, I thought we'd pull back, and that's what we're doing. How do you ignore everything going on with NVIDIA and think you're going to carry that stock up? You're not right now. And the market's in a thrust to the downside, but it's not acting bad at all. It's back into a support area. I don't see anything there. I thought home builders would pull back, and I mentioned it to you, to the 18-day average of closes. Go back. The videos are right there over the past 2 days, 3 days, and you're there. Now the market is in position to wait for the jobs report. Same in the home builders. This rally culminated up here at the Bollinger Band. Again, you weren't embedded. Get up there. What do I think the pros do? They take off their positions. If you pull back, you go back often to decide what to do next at the 18-day average. How many of these charts you're looking at are at that 18-day average? There's another thing going to happen. We know what the thing is. It's the jobs report. And then we'll start arguing for the next week. Gee, is the Fed going 25 or 50 basis points? How many of them are they going to do? I don't care. All right? They're going to cut. That's what's important. They don't want to send the wrong message, but they want to send the right message. If you really see the jobs numbers are bad and this JOLTS number's bad, they'll go 50. If they see the jobs are still holding up, and even though the JOLTS was bad, I think they go 25. So we wait and see. I don't think they're sitting pat. As long as you stay embedded here in the financials, and I explained that, they stay bullish. Tomorrow will be the day that it gets very interesting. Tomorrow's when I think the pros will nibble on the long side if it's further down, as long as the red line stays over 79. Closes under that, I think they'll be out of their trades. In XLI, this is just what I'm talking about on nibbling. Let me explain this. Here you are. You're embedded. So if you don't take out this high, I think the pros will try to buy a break since you're embedded, but they'll bail on that break if the red line closes under 79. Just like that, and here's where you're at. Wouldn't be surprised now if you go lower. Got it? That's how I think they look at momentum. In XLE, okay, falling apart in the energy sector. We know that. It could go even lower. What OPEC has to do now is send another message that, yes, they were thinking of increasing production, but market conditions don't warrant it. Now, their problem is that the U.S. and some South American countries have cut into their market share. There's nothing that can be really done about that. But if they flood the market with more oil by producing more, well, then you're going to take the whole sector, the producers down, the companies that service it, the oil drillers, everything goes to lower prices. And while Donald Trump, our ex-president, says under him everybody's going to produce only if they make money. Easy to talk the game, as Harris does, only if they make money. In GLD, no trend. Stuck at the 18-day average now. Silver, if it can drop down here, I think it washes out all the old longs, and I think you'll find your big supports in this area. It is certainly not in a buy zone. Resistance is back up at 26.30. In the copper, like in silver, if it can fall further, 39.31 is interesting, only for covering shorts. You're oversold. There is no reason to be long this market at this point. TLT, making a run for the upper Bollinger Band. I expect the pros to ring the bell on positions tomorrow if it hits that number. And in the dollar, as I said, I thought this was a bear market rally yesterday. And until you now take out yesterday's high, I think pros will sell these rallies and they'll see if they can get movement off of it, off the jobs report. And they'll probably flip-flop that idea on FXE. Got it? So, put it all together. Why not join me in the mornings in my subscriber videos? Remember to click the link up here. You only have 3 days more after today to join in. I'm Ira Epstein. I'll see you at first thing in the morning. Take care.